What up with the wheelhouse, baby? You guys ready to hit it? You ready to get it? You ready to level up and get with it? Time to charge the batteries and get that money printer out. We're headed to the moon, stack some chips and get paid out. Now on this channel, no baby stepping, no side stepping, and definitely no maybes. And like I always say, green lights to the beach, baby. So look, in this video, I wanted to go over a few things. Why the market is dipping, what you should know, should you be worried? I want to take a look at the macros. I want to take a look at some news. I want to take a look at some catalysts. And then I want to give you kind of a general scope and give you my experience on why I think the market is dipping. So let's go ahead and take a look. Well, first of all, I wanted to say thank you to everybody that had subscribed to the channel. And we are just about 1,000 subscribers, so I'm really excited about that. It's pretty cool. If you haven't subscribed, just subscribe right now and hit the like button on this video and then select all so that you get the content that I put out. So I want to say thank you for that. I also wanted to remind you the Discord link is below in the description of this video. And as you can see, you know, I'm constantly in the alert section. These are all the alerts that I've been putting out. You know, I keep people very up to date. Today I was stopped on a few, but I was stopped in the profit. I was stopped on SoFi at about, I think, 9,000 profit, Palantir, maybe 2,500, 3,000 profit, somewhere in there. I was stopped on another, oh, Unity Software. I was stopped at 167 in the profit, about 5 grand. I also got stopped at a small loss, 500 to 1,000 loss on Cleveland Cliffs. So, you know, this is why it's good to have the alerts, because you know, I can kind of foresee when you have a big green day, you know, the odds and chances of there being a sell-off day right after, and the way that I tighten my stops to protect it and get moved to cash, it's fine. And you don't have to trade every day. I'm not doing a lot of trading today. I'm just watching the market. I'm taking a look at everything. I got my profits. It's on the side. It's protected. All my principal, all my profits. Again, this is why I don't worry about a market crash. And I made a video about that. You should check it out. Just scroll through the YouTube channel and you can see a video called Why I Don't Worry About a Market Crash. And this is why. I got stopped out, everything moved over with my profits, and had a huge day yesterday. And I still have a ton of open trades, don't get me wrong, but you know, I got my money, and when I'm ready to re-enter technically, I can just grab them again, so it's not a big deal. But yeah, the Discord is cool. We got all the Jedis in there, the Jedi chat, you know, we have the one-on-one, the alerts, you know, the general, the stock, the crypto, the watch list, all that stuff is in there. So you guys should just get in there. It's really cool. I mean, there's a lot of people in there talking about stocks and crypto. Last night I did advanced day trading. And we went all the way from hunting a crypto. We narrowed it down to 3 of them with the right technicals and right momentum. And then we narrowed it down to 1. And I did it in the crypto chat so everybody could watch, and we broke it down to super tactical, precise, precision day trading style. And we did it on one called EOS. And we were looking at Atom, Cosmos, and GRT, and IOTX, and you know, we went ahead and went with EOS, and I trained everybody, and they were just like blown away the way I was doing it. They never were really thinking in those terms, but they learned a lot really fast. So it's good because you get all kinds of techniques, you get the alerts, and then if you're a Jedi, which most people are just becoming Jedis because they want to take all the courses, plus have the one-on-one sessions with me, you get 10 hours that you can select, you know, at your convenience. I have a calendar. You could select what times work for you, and we can talk about anything, portfolio reviews, strategies, what's your biggest flaws, what's how long have you been in the markets, what's your preference, crypto, stocks, like what, you know, what's your interest, do you need to pull money out monthly, or do you add monthly? Like, we could just look at everything personally between you and I, and it's just private, and just kind of help you on your way to becoming a better investor and trader, whether it's a swing trader, a day trader, whatever it is you want. I will help you and coach you in that way. So let's take a look at the macros. Okay, so at the time of this video, just about all the major indexes, the NASDAQ, Dow, the Russell, the SPY, they're all down roughly 0.5%. Okay, now we had a really big green day yesterday, right? which was really good, and a lot of money was made. We got the infrastructure bill play, we got the crypto rally, tech, we got energy, we got financials. I mean, there's a lot of places to pick from and a lot of good stocks, and there's a lot of stuff that's rotating and money's moving in. And I've been trying to show you that with institutional support and how to follow the money. Well, typically after a big green day, there's a high likelihood that there will be a taking profit day. And then if you, of course, mix that in with some uncertainty and some news catalysts that, can put the market a little bit on edge, it's likely that there will be a down day. And this is why, I set those stops and update you guys in the alerts, and I try to do it on the videos too here. That way, like if there is a day, it's like you buy technically, and then it goes up, you move your stop. It goes up, you move your stop. It goes up, you move your stop. It goes up, and move your stop. It goes up, move your stop. It goes up, move your stop. Next day it comes down, boom. All that profit and all that principal just moves over, and you're not stressed out. You're not holding any bags. All your money is safe and on the side. And when you have 4, 5, 6 of those going, and they roll up for 8, 9 days, and then boom, they come down and move you over, well, you got all that money. You got all your principal and all the money safe and sound. And then you just wait for the uncertainty to fade, or there to be a catalyst, or your favorite stock to hit support and bounce, and then you enter technically, and you just rinse and repeat. You do it over and over and over, and like Pac-Man eating pellets, green lights to the beach, baby. So I don't worry about a stock market crash, and I'm not worried right now. However, there are some things that we need to discuss. Now, I'm not going to get too deep into like the Dow theory and all this stuff on the macros and whatnot, but basically, everything looks okay, even though it's down a little bit today. But you do have to keep in mind that the Dow is a barometer for the overall economy. And if there's something wrong in the economy, or with the largest, most influential companies in the United States that are within the Dow, then it will be reflected in the Dow, and it will usually lag and reflect in the economy later, whether that be a housing crash or a recession or some of these other things. But it will show up in the Dow first. Now, there's a couple things that are to be concerned about. The first is the major companies are missing on earnings. Okay, you had Facebook. Okay, for the first time that I can ever remember, they missed on revenue. You had Amazon. It's a big one. You had Apple. It's a really big one. In fact, the biggest one. Now you have PayPal. You have other ones that are, look at Tesla as an example. You have to understand that the NASDAQ and the S&P have a weighting of Tesla. I don't know the exact number. We can look it up, but I'm just going to go with about 1.1 to 1.5%, if I recall, that Tesla is weighted in the S&P. So if Tesla is down $90 or whatever it is today, and it was down 40, 50 yesterday, I mean, that's pretty significant. So it might not sound like a lot to be 1.5% of the S&P, but it is one of the largest weightings of the S&P. So if that goes down, and then Apple is coming down, and then PayPal is coming down, and Palantir is coming down, and SoFi is coming down, and all these are coming down, it creates a general downward pressure on the macros. And you should always be looking at the macros, the NASDAQ, the Dow, the Russell, and the SPY first. And then you look at individual stocks within the umbrellas of those benchmarks, okay? So the macros are down a little bit. There's some uncertainty. We're starting to miss on earnings, which is a warning shot. In my opinion, it is the first sign of what's to come about a year and a half up the road. And I don't know what exactly that'll be, if it'll just be like a severe correction or if we'll go into a recession. I don't really know. But what I do know is that the stimulus money is running out. The supply chain shortages for companies like Apple and many companies, actually, vehicles, all kinds of problems with the supply shortages. So you kind of put all this stuff together. The stimulus money is running out. The velocity of spending is running out. We're now rotating into new inflation benchmarks and talks, rate hikes coming. You know, there's all that. So there's going to be rotations with that, which is totally fine. We know how to play that at the wheelhouse. We make money on that kind of rotation and that kind of intel. So it's not a big deal. But we got to pay attention to it, right? And we got to pay attention to the macros. Now, I think when the big companies start to miss on earnings, that is pretty much the first sign, and that's going to get Wall Street jittery. That's going to get, because investors like to invest in companies that are beating on the earnings per share, not just from last quarter to this quarter, but when they report this quarter from a year ago. They also want a substantial annual revenue beat. Okay, so if you're not getting both of those and you're an investor, why are you investing in a company that's not growing? And that's the mentality of myself and, you know, Wall Street and pension funds and institutions and hedge funds. And that should be the mentality of you as well, because you don't want to invest in a company that is not growing, because then you're just throwing your money at something that's speculative, momentum-based, and hype. You want to put your money into a safe investment that is growing, and they're showing that on their earnings per share, and they're giving good guidance. And when all these big ones stop doing that, that to me is like the first sign. It's a warning shot, and there's usually a big lag. However, if you go back to the Dow theory, one of the things that he said, besides trading with the trend and the barometer of the Dow equates to the overall economy, he also said, and he's correct, that every single thing is discounted in the market. So if people start seeing these missed earnings in a general scope in the sector, which you know, in my courses goes through that, as well as blended earnings and how to get in or go in heavier into sectors when you start seeing things, you know, in the earnings. Once you start seeing these kind of problems, that's when, like, the big banks, they're going to tighten up too. They're going to move their money to the side, just like I did, and they're going to wait for the rotation. Now, obviously, the safest plays are going to be, you know, the infrastructure. There's a lot of money going there, so why wouldn't you invest in companies that, you know, make copper or make sand and gravel or heavy equipment like Deere or Caterpillar, or like there's a big broadband stimulus in that infrastructure, so maybe like Crown Castle, or, you know, there's a lot of them. And I had an infrastructure video where I picked 20 of them, and they all went green yesterday. Some are red today, but there's great picks in there for the longer term, so you might want to check that video. I just put that out yesterday or the day before, so check that out. It's a really good one. You know, even companies like Home Depot would be good. So yeah, between there being a big day yesterday and a high likelihood of a sell-off the day after, which typically happens when you have a huge green day like that. And we've had a rally for a couple of weeks, so it's not just yesterday, but yesterday was kind of like a euphoric peak. It's typical that we'd have a sell-off. Then you have a lot of the big companies missing on earnings, which is making everybody jittery. And remember, 75% of all the money comes from Wall Street. So if Wall Street's getting jittery and they are the stability of the market and they're feeling unstable and they start pulling money, well, yeah, the macros are going to fall, and then individual stocks will fall, because as the tide goes down and the boat goes with it, you know what I'm saying? So it's okay. That's why we put protection protocols in place. And again, just join the click the Discord link, get in there, and you can start talking with me and other members and start protecting, so that you're not in the red and you're not bag holding. You're entering technically, you're raising your stops accordingly, you're making the right decisions in the right sectors, and then you're protecting. And then when a bad day does happen, it just moves you over. It's no big deal. You sleep fine, and you got all your money plus what you just made, and you get to put it back in on the next momentum shift. And that's how we roll at the wheel. Okay, another thing that we have to look at is more uncertainty, which is President Biden is interviewing and looking to name a new Federal Reserve chair. Now, we are all used to Jerome Powell. Whether you like him or not, we're comfortable with him. We know his mentality. He wants people back to work. He wants to stimulate the economy. He's done a great job, and it's really benefited you know, the country, but it's also helped investors in the stock market. And Jay Powell, you know, he's had his finger on the button with printing a lot of money. And you know, Biden is talking to other people. I know at least one that I'm aware of, a woman, and you know, interviewing for replacing Jerome Powell. Now that creates uncertainty, because markets, we want certainty. And just like when the big companies are missing on revenues or earnings or guidance, that's uncertain, and it puts us a little on edge, right? And then you have something that's stable, like our Fed chair, Jerome Powell, possibly being removed from his position. That also creates uncertainty. So, you know, you got three major things going on, in my opinion. You got a big rally to a euphoric peak yesterday, to a natural sell-off. Then you have catalysts such as this, with Biden potentially removing Jerome Powell from the Fed chair. And then you have all those missed earnings and beats from the major companies. And then it's starting to show up in the macros, which is getting the institutions and the big smart money to tighten their belts and maneuver and pull money to the side. And when they do that, that's going to create instability for us, the retail people, because they're 75% of the stability. So those three things coupled together is why I think that we have a dip today. And, you know, we'll have to see where that goes. But let's take a look at this. So it says right here on Bloomberg, President Joe Biden and key advisors have begun to zero in on filing a series of vaccines, a series of vacancies at the, I was like, vaccines, what do you mean? They're filing vaccines? My bad. They're zeroing in on filing a series of vacancies at the Federal Reserve as Jerome Powell's term winds down amid a push for stricter ethic rules and a more diverse central bank board. So when I see the word diverse, I'm thinking like, you know, he's probably like thinking, you know, like either a woman or, you know, maybe, you know, someone of a different ethnicity. So, and that's part of Biden's policy. I mean, look, he has Vice President Kamala Harris, you know. Janet Yellen is a good example, another one, at the Treasury Secretary. And there's more. There's more. Like, so there's quite a few more, actually. But yeah, I mean, that could be the reason. You know, it could be a double play. Like, hey, we want to put somebody else in there that's more on our agenda, plus maybe put a woman or somebody of a different ethnic background. So that could be something to look at. Says Biden has started to meet with top White House and Treasury aides to review candidates, according to two people familiar with the process, even as the White House has begun largely consumed with negotiations over the size and contents of President's multi-trillion-dollar economic agenda. So it goes on to say he hasn't made a choice, but it's something that we need to look at. And also there's going to be let me check this real quick. I think that we have some economic data coming out this week that we need to be aware of. Let me just look at something real quick for you guys. So, yeah, we have CPI coming, guys. We have core CPI coming. That's the inflation data reports, guys. And another jobless claim. So yeah, you got CPI. You have Biden interviewing to possibly replace the Fed chair Jerome Powell. You have missed earnings. You have a euphoric rally. You have some things going on. We got to pay attention to the overall. So should you be worried? No, you shouldn't be worried, but you should be aware of these things and you should pay attention. Now, when you're working with the wheelhouse and you're working with me in the Discord, you know, if you do get moved to cash, then we're always on the hunt. We have our money, and as long as you have your money, you can always make more money. So, you know, there's always another trade. That's the first thing. The second thing is you don't have to trade all the time. I've been telling you that we like to miss the bad days. Well, this is a bad day and we're missing it because we were stopped out in the profit because we have our protocols. So we don't worry. We don't worry about a crash. We never worry. There's always another day to trade, but we want to be aware, okay? We don't want to be consumed by the news and consumed by everybody in the media, you know, making negative headlines, but we want to be aware of them. And, you know, there will be a time, it might be tomorrow morning, it might be the next day, and there will be a momentum shift, and Wall Street will come in. It'll probably go in towards the infrastructure plays. energy, transportation, financials, infrastructure, construction. These are going to be like the sectors. Growth is obviously been doing well as well. So there's plenty to play with, plenty to trade, and there's always another trade. Crypto is doing really good. I'm going to do another video on crypto. Everything is going to plan, nothing to worry about there. I'm going to do a video getting more in detail on Tesla, Neo, PayPal, Lucid, Palantir, SoFi, maybe like Upstart. So I'll work on that. And then for all you guys that are in the Discord and the courses, I will be working on courses all night to continue plugging and playing on those for you. So again, thank you guys so much. I think we're going to hit 1,000 today, and I'm really, really excited. And I'll be working on another video, and then I'll be working all night on courses. And welcome to the wheelhouse.